Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong sell-off on high volume that took ES all the way down to 53.75, at which point responsive buyers stepped in. The other markets also hit some major support, and so far the buy side has been active off of those lows. At this point, heading into the open, we know that the overall bias in this market is bearish, but because the market has hit a extreme and it's bouncing off of some decent support, we could simply balance within the range over here instead of continuing to sell off. So even though there's potential to retest 55 quarter to 57 quarter and potentially even 51 to 53, the downside may be limited if we don't get that heavy continuation on the momentum lower. So from this point on, we know that our bias overall is short-term bearish, but at the same time, because the markets have hit an extreme and some decent support, we could simply balance in a range today instead of continuing lower and selling off even below the overnight low. On the upside, the first inflection point and the major inflection point in the ES is 71 to 73 half. How the market reacts to that zone is really going to set the tone for the day. As long as ES is holding below 71 to 73 half, we know that the sell side is in firm control. If we get a breakout above 71 to 73 half, that would tell us that the responsive buyers are quite aggressive, and now they're pushing ES back into the prior balance. And from that point on, we could get a move up to 79 to 81, at which point the sell side can be active again. And if there's a lot of momentum, then perhaps we can, recover this move. But that's not the high probability scenario. Right now, our focus is going to be on the S&P holding below 71 to 73 half. So as the market approaches that zone, we'll have to see what type of momentum we're seeing in the market. Is the market going up on very light momentum, which will make it more prone to failure, or is it going up on very strong upside momentum? So monitor the NYSE tick to see the level of momentum you're seeing as the market goes back up towards 71 to 73 half. And even if it breaks that zone by a couple of ticks, it doesn't mean that the buy side has really taken over. The market could be short-term exhausted into that zone, and at the very minimum, we can expect some level of rotation off of 71 to 73 half. So the challenge in this market today is going to be that the market has already moved a pretty decent amount overnight, and there may not be as much opportunity now left on the day time frame. And we simply might just balance in a range here or get kind of a two-sided type day. And even if we do get buying here, it's going to be difficult to pinpoint a price where you can enter long with minimal risk. The first short-term inflection point is 60 quarter to 62 quarter pre-market support. That area does have potential to hold if we are going to get that responsive buying stepping in and pushing us back up. But within that range, it's going to be difficult to spot an ideal buy setup. So you can lean on some real-time levels like the overnight VPOC, which currently is at 64 half. And if we get some stability there and then we start getting upside momentum, then location is not going to be as important. But overall, I think the safer way to play this market is to wait for the market to reach an inflection point and then only trade it at the inflection point, because initiating a trade in the middle over here is going to be very risky. You're not really going to know one way or the other whether you're really in at a price that is going to allow you to hold that trade. So, given that the market's already moved a pretty decent amount overnight, I think the safe approach here is to simply sit back and wait for the market to tip its hand, to give you some more clarity, and wait for the market to approach and test a key zone and avoid everything in the middle, because there can be a lot of chop in the middle, and you don't really want to initiate and just get chopped up as the market is just kind of deciding which way it wants to go from here out. So 71 to 73 half, first inflection point on the upside. It's a good area for sellers to step in, and that could be a short setup for us given the strong selling we've seen overnight, targeting a move back down into 60 quarter to 62 quarter and 55 quarter to 57 quarter. On the downside, that initial support zone at 55 quarter, 57 quarter is very important, and that is an area where buyers can step in yet again and push the market back up towards 71. In the event of a break below initial support, buyers can still be active at 51 to 53, but you have to be cautious on the long side at that point because the overall bias is bearish, and anytime you are stepping in, even at a zone, you are going counter to the immediate bias as well as even the larger time frame bias for us at this point. So the long setups today are going to need to be timed a bit better, and you are going to have to be a bit more conservative and selective on the long side at the zone and manage that trade a little bit closer and be a little bit more active and willing to take the risk at the key resistance zones, because even if the zone is not going to hold, at the very minimum, it'll likely provide some level of edge, and it'll give you enough time to figure out whether holding that short trade makes sense, or is there just too much momentum and it's better to get out of the way? Because, like I said, the market has hit a pretty decent area of support overnight. It is bouncing off of a larger time frame support area, so it can go back up to 71, 73 half and possibly even a little bit higher, and then start balancing within a range. So overall, the expectation is for balancing, but at lower prices. Ideally below 71 to 73 half, but it could be even below 79 to 81, depending on the level of buying we see in this market off the open. So those are the main ideas heading into the open. Let's see if the sell side can still maintain short-term control below 71 to 73 half. That'll again set the tone and the bias for the day, and we'll take it from there.